You're watching the Daily Market Comment by Marios Hadjikyriacos. I'm Christina Marujos, and thanks for joining us at XM.com. Global markets staged a powerful rally to kick off the new week. Stock indices in most regions closed with approximately 1.5% gains, while the defensive US dollar edged lower with no real catalyst other than the furious buying spree in Chinese stocks after state-backed media relentlessly encouraged investors to join the new bull market. In any case, this exuberance seems to have evaporated on Tuesday, with global stock markets turning lower and the dollar recovering some of its losses as the focus has turned back to the worsening virus picture and the implications for global demand. Spearheading the worrisome virus news globally, Australia's second most populous city, Melbourne, just announced a new full-fledged lockdown for 6 weeks to bring the recent outbreak back under control. The news and the Aussie tumbling, and maybe the biggest factor weighing on risk assets today in general, serving as a stark reminder that even if a country contains the pandemic successfully, future outbreaks still cannot be ruled out. All told, an ocean of liquidity and stimulus has so far been enough for investors to turn a blind eye to the many risks unfolding around them, but so much of the economic recovery seems discounted here that any future gains may be increasingly difficult to come by. Indeed, the risk-reward picture for riskier assets like stocks and commodity currencies seems quite unattractive from here. U.S. economic data for July may be ugly due to the reclosures. There's considerable uncertainty around how much more stimulus Congress will authorize, and there's a fast approaching earnings season that investors are going into blind without much guidance by firms. On top of everything, the U.S. Economic Surprise Index is currently at all-time highs, which implies either that investors' expectations will gradually be calibrated higher and make it more difficult for data to beat forecasts, or that the data might disappoint elevated expectations. Longer term, there's also a highly uncertain U.S. election season to consider. Thank you for watching today's Daily Market Comment at XM.com.